So let's begin. And I'm still your host and trainer. This is the disclaimer. What it's trying to say here is there are loss, there are risks associated with forex trading, and so you want to be well aware of what you're doing. And that is the reason why we are offering this training so that people can have more in-depth knowledge to be able to make better trading decisions, let's put it like this, and be able to manage their risk properly. So in today's class, we're going to focus mainly on the chart, just like we did yesterday. But this time we're going to be talking about support and resistance. So we're going to look at market trends. We're going to see how to draw support and resistance properly and how we can trade support and resistance. Whether we're going to trade in the direction or trade the breakouts. If you get this part of trading of you invariably become a better trader if you can harness it and put it to practice, because this is where the head or the meat of forex trading is. If you understand support and resistance and the way they work, then if you combine it with what we learned yesterday on price action, then you find yourself becoming better. You'll be able to identify the sense in the market. Now, trends and how they work. If you've opened your charts, if you pull up a chart, you'll notice one thing. First of all, you notice that it looks zigzag and jaga if you wish. But you also notice that if it's making move in a particular direction, it does so in waves. So it's moving in a direction, it moves in waves, like in up down forms, and what affects us wave. Now, in making this up and down pattern, it forms support and resistance. And so when the market is moving higher, we refer to it as an uptrend. When the market is progressively moving lower, it is also is referred to as a downtrend. But when the market is moving in sideways or moving not moving so much distance, just bouncing up and down, we call that a sideways trend. Now, you can make money trading any of these trends if you get better at the skill set. So we're going to first of all look at the three types of trends that they are, and we're going to see how they constitute the support and resistance that we see on our chart. Now, if you look at this diagrammatic representation here, this just more or less represent how the market moves. So the market, you can see that the market is moving from point A to point B, but it doesn't do so in a straight line. It moves in zigzag pattern. Now, when the market moves up and pulls back down, it usually finds support. And then if the support holds, it pushes price up. And then it keeps doing the same thing over and over again. Now, support oppose where a downtrend is expected to pause due to concentration of demand. So what that means is there are previous areas where traders in general will be looking towards. And then when the price gets to that level, you see buyers stepping to push price up. And the same thing with resistance. Resistance occur at previous areas of temper where there is supply, due to so sellers, you now have sellers doing the reverse and coming in to push price down. Now, let me pull up this. So the market moves like this. So the market moves from point A to point B, like that. Now, usually what we tend to find in the market is when it pulls back, it usually comes back in and around a previous zone. So you find the market pulling back to areas where it has previously broken above. When the market moves, it moves in waves. And when it breaks through a previous level, it usually, in most cases, pulls back to test it. And so because of this insight, we are able to make trading decisions. You are able to make better trading decisions. The truth is, the best traders do not chase the market. You wait for the market. If you try to chase the market, you're going to lose a lot of money. And that's the reason why people lose money. So you see a market that is going up, and then you're like, wow, and then you enter the trade buying, and what you see next is the price pulls back. And then when you think, what is going on? You take out let me collect this loss. So you take a loss, and next thing you see the price move back up. And then you start thinking, wait, is my village people chasing me or what? No, they are not. What is happening is that is just the way the market moves. The market moves in waves. So you need to understand the way the market moves in order for you to be able to profit or to take advantage of the market. So when the market is moving higher, it doesn't just do so in a straight line. It does so in a wave. So it moves from a it moves, pulls back, moves, pulls back, moves, pulls back, and so on. Now, in the same way, when it wants to reverse and start going down, it would also do the same thing. So if you have a market that has been pushing higher, and then, but that the thing you also need to know is nothing goes up forever and nothing comes down forever, or nothing stays in a sideways trend forever. So you can have the market, you can see from this point up here, it has pushed, been moving higher. Now at this point, you can now have the market do this, moving sideways, and then you can now have the market break below and then start doing this. So that is the way the market works. Now, let me use this diagram now to explain trend. When you see a market making progressive higher highs and higher lows, so you see the high, the next high is higher than the previous high, and the next low is higher than the previous low. Continually, the market is in an uptrend. So you can see the market has been in an uptrend here. Now, when you see that the market is not really moving that much, so it's just going from side to side, like you can see here, that the market is not moving very far. This is what we call a sideways trend. And then when you now see the market moving lower, but making lower highs and lower lows. So you can see that this high is lower than this one, and this high is also lower than this, and same. So this now would be a downtrend. This would be an uptrend, and this is a sideways trend. So these are the trends in the market. These are the only way the market can move. The market never stays at a place, meaning it doesn't the price will not just stay as one particular spot. It would move in an uptrend, move in a downtrend, or move in a sideways trend. So understanding this trend would help you be able to take advantage of the market. And then this is where support and resistance come in. Now, when the market moves, so when the market moves, like you said, it tends to do the same thing. It tends to respect certain levels. Now, these levels are not cast in stones. It doesn't mean that if that it has to exactly touch that particular level. But what you will notice is in and around that level, you see the market react. Now, when the market breaks free from an old level, so when the market, so in the past, this level here would have been a level of resistance. So now what I'm assuming is, okay, let me take this off. So now this level here, when the price was still down here, would be a level of resistance. Now the moment price breaks above here, this level now becomes support as far as price is above it. So once price is up in this region, this previous level here becomes it becomes a support. So you now see that former resistance has now become present support. And now what you might see is you can now have price come back and test that resistance. So what was keeping price down here, what was keeping price down here is now what is keeping it up here. And the same way, now even if it's a downtrend, previous support now becomes new resistance. So if you're able to understand the support or be able to draw support and resistance properly on your charts, then you would be able to see what is going on in the market. And seeing what is going on in the market is the first step to making profit. Now let's go to the chart and make sense of it. Now, when you pull up a chart for the first time, it might not look like this, it might look black, but if you want to have a white screen, you want to go to properties and select the type of chart you want. Okay, so you just select the type of chart you want. So I prefer this white on black screen. Now you have a chart like this, and you'll notice that there's no much sense. Let's zoom out. There's no much sense in the market. You cannot really see what to do. Now, this is where support, being able to drop support and resistance properly would assist your trading. Now, support and resistance, there are levels of major turnaround in the market. Not necessarily major, but there are levels of key levels in the market where the price tends to react. So what you want to do is just pull up any chart. It doesn't matter which chart it is. It can be gold, it can be Euro USD. It doesn't matter. So the first thing you want to do is this. If you're taking notes, you want to keep this in mind. So the first thing you want to do is to zoom out. So you want to zoom out so that you can see a lot of the charts. And in drawing your support and resistance, it is best for you to do it on a higher time frame. So do it on the daily time frame and the weekly time frame. So if you're drawing your support and resistance, I would employ you, especially if you're just starting out, to stick to drawing your support and resistance level on the daily and the weekly time frame. So I'm going to just stick with the daily time frame. Now, the reason is you don't want to have a chart where there is no room to trade. So there's sometimes I see some people's charts and it is just crowded. What I mean by crowded is you see support. Okay, let me make this bigger so we can see it better. Okay, so you don't want to have your chart looking really crowded, looking, some people would have their chart and everywhere there is support and resistance level. Now, what that would do for you is it will just cause analysis paralysis where there's nothing to trade. You cannot see where to trade because almost everywhere where price is somewhere you're looking at. So what you want to do, you don't want to do this. You don't want to just draw support and resistance indiscriminately. What you want to do is to, first of all, if you have any of those kind of charts, clean it up, delete all the support and resistance, and then let's show you how it's done properly. So I'm going to this is going to be, let me just remove all of this. Okay, so just patience, take away all of this. Okay, so let's want to have our chart looking fresh and clean. So first thing, like I said, you want to zoom out. So zoom out of your chart so that you can see more of what is going on. So you want to have your chart looking thinner. Now, you want to pick areas that are clear to identify. So pick turnarounds, areas that are clear to identify. So you want to use the horizontal line. If you're using your mobile phone, it's also there. You can use your MT4 on your mobile device. What you want to do is just pick up a chart. When you pick up the chart, just press anywhere in the screen. Once you have a chart open, once you press anywhere in the screen, there should be an icon that looks like three, I don't know, would I call it flowers or something like that. If you click on it, you see objects. So you want to add, you click on the plus button and look for horizontal line. It's not difficult to navigate. So what you're looking for is horizontal line. Here, this is where it is. So you click on the horizontal line. Pick out the very obvious ones, the very obvious levels of resistance and of areas. But by resistance and support, I mean areas where you see that the market have made turnaround. So here I can see that the market, turned around from here. And you can, okay. So I can see that the market did a turnaround here. Let's pick another obvious area. There's also another obvious one here. There's also an obvious area here. I can see the level here. Just pick out only the ones that are obvious. Don't take out, but don't try and then claw anyone that doesn't look clean enough. Skip it. So just pick out areas of major turnaround. Now, once you've done that, I'm only going to pick out the ones that are clean. Now that's the first step. So you've picked out areas of that you can see obvious turnaround. The next step will be to adjust. So you want to adjust it to have the most number of touches. So you want to move it because remember this support and resistance is not rocket science and it's not cast in stone. So what you want to do is you want to have the market touch that level a couple of times. So this is where you now have to do your adjustment. So you can now push it up or push it down. And then if it doesn't get enough touch, you can also delete it as well. Okay. So what I'm just doing here is adjust my levels so I can see what price is doing. Now, mere looking at what we've drawn here, you would notice something. So I'm going to zoom in. Let me make this full screen. So when looking at this, you can notice something. Now, when the price, these levels that we've highlighted, you notice that the price either bounced back or retracted from those levels. So you can see when the price got here, it pushed price down. And then if I zoom in and show you what is going on there as well, you'd also notice, okay, okay. So if I go back in time and see what has been happening on the chart. Now, you'll notice that price, remember, you can see how the price has been moving in waves. This level has kept price down. You see, price got up around there, so I'm going to want to adjust this one. So when you've zoomed out to pick the level, you can now zoom in to adjust it properly. Now, price rejected this level again 1, 2, 3 times before eventually breaking above it. Now, when it did break above it, you can see how price In this time, in this scenario, it moves in the sideways trend. So remember, we talked about trend. All the while here, the price is moving higher, so making higher highs and higher lows, higher highs and higher lows. Now, when you got to this level, you see how price struggles to break past this level. You see how it struggled to break past that level. Now, that is a sideways trend. So if I can just use highlight that. So here is a sideways trend. So you see price moving from side to side, not really making much move. All the while here, it has been moving in an uptrend, making higher highs and higher lows. Now, after some time, it eventually broke and now started moving down. So it's now making lower lows and lower highs. And this movement in the market, and you can see that there are areas like it's clear here. You can see here that there's a level that has been holding price above, and there's a level down here which has been which has been keeping price in range. So while this level has been preventing price from pushing higher, price have struggled to go below this level here. So this is in let me do this. So if this was the current chart like this would be a sideways trend. Although yeah, it broke down below, but it quickly ran back and entered into the box. Let's put it like that. And so you can see how price has been bouncing off of this level. So it continued sideways for a time and eventually broke below it, and then continued sideways for a time and then eventually broke below it. Now, if you notice, when the market successfully breaks below a level, you see how it came back and tested it once, twice, before eventually moving lower. Now, you also notice that there is a level here too that has been keeping price low, keeping price above. When the market finally broke below it, price came back, tested it once, twice, and in this process, from here to here, if we check the value in pips is around 280 pips. And then you can see price tested it, tested it, tested it, struggled to break below, and you see how it moved. And then when price eventually broke above, you can see how it came back again and tested it this time as support. So remember, support is what keeps price. Support a level, the market is facing a level of support when it's facing a level that is keeping price above, and resistance a level keeping price below. So you can see here that all the while, this level has been acting like a level of support, just like this. This level here has been acting as a level of support. But when price finally broke below it, that same level started acting as a level of resistance and keeping price low. Before, that level has been keeping price above. Now, it has now started keeping price below. Now, just knowing this alone, if you know how to draw your support and resistance properly, then you can now be looking at how to trade it properly. So once you've been able to identify your support and resistance level, then you can now look into trading. So before we look at how we can trade this level of support and resistance, I think it would be fair for me to do one more example. So which pair should I use? Euro USD, or should I use the gold? Okay, let me use GBP USD. So remember, in drawing your support and resistance, the first thing you want to do is make sure you're on at least the daily time frame. So you can use the daily or the weekly. So you want to use the daily or the weekly. So I'm going to use the daily time frame now. And then the next thing you want to do is zoom in, zoom out. So you want to zoom out so you can see more of your chart. If you're using your mobile phone, you can just pinch your screen. If you're using your laptop, you want to click on minus button to zoom in, to zoom out, and shift plus to zoom in. Or you can just use the zoom tool here. You click on it to zoom out. Okay. Now let's draw our levels on the GBP USD. So what you want to do, we've zoomed out properly. Now we want to pick our horizontal line. So we go pick out. Remember, I want to pick out the obvious ones, only the ones that are very obvious for us to see. I can see there is an obvious one here. If you're not so sure about a level, but you want to just check, you can use the crosshair. If you use the crosshair, you can it temporarily draws a level for you so you can see where it touches. So you can notice that if you put it crosshair here, you can see how price touched it in several places. You can see, okay, that is what I'm going to do. So I'm going to draw a level here. So I'm just going to go ahead and draw the levels, the obvious ones that I see first. They don't need to be perfect or anything. They just need to be obvious. Take only the obvious ones, levels that have obvious turnarounds. So I can see here, and this is even looking clean. And I can also see there's also another here. We're going to adjust them. Now, now you can now see, looking at this chart exactly, you can now see that it now makes sense. Compared to a plain chart, compared to compared to a plain chart, this now seems to have some kind of sense to it. So you can see areas that has been keeping price. Now, the next thing we want to do, just as we said, is to adjust. So we want to adjust it to have the most number of touches. I think this is good. I think that one too is good. This is touching two obvious highs. And you can see here, the price rejected here, here. It pulled back, but not exactly. You can see a rejection here, here, and here. So this is a strong level. Another thing, you can also see this one here, rejection, 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 rejection ish here. So and also a very obvious look here. So now this is what analysis stand for. So just make it, keep it simple. Don't let anybody tell you need to overcomplicate things. Keep it simple so that you can see price. You want to see what price is doing. That is the way you are going to make money trading the forex market. So you want to see what price is doing cleanly or neatly so you can know what to do in time. Now, the next step, like we've done, I think we've adjusted our levels. They all look good. Now, let's now look at how do we trade support and resistance? How do we now profit from trading support and resistance? Remember yesterday's lecture? We in the previous lecture we looked at price action and candlesticks, how we can trade them. So if you see a paper bouncing in downtrend, so you see a bullish pin bar in a downtrend in a very low price, it can signify that you are about to see price moving higher. And then vice versa, you see a bullish engulfing bar or a bearish engulfing bar. Now, how do we trade support and resistance? Now, the thing about support and resistance and why it works is this. Professional traders all over the world, everywhere, both hedge fund managers, brokers, traders, individual retail traders, they all do support and resistance. And so they are most likely looking at the same area. What that means is I've drawn my levels. And so I'm not just the only one who is doing that. I'm looking for areas where the market has probably been turning around or has been rejecting. And so in those areas, those are places where I'll be looking to buy or sell depending on where it is in time. So that is the reason why it works. It works because traders in general use support and resistance to gauge key levels. Now this is what I mean. So I'm going to zoom in now so we can see our chart clearly. So I'm going to zoom in. Now, if you notice, let's use the GBP USD, so the pound USD, and let's use this. Okay, let me make this full. Okay, so you can see better. Now, you notice that let's say from here the price has been moving lower, so the price has been falling down. By moving lower, it means that we're making lower lows and lower highs. So you can see from a high price here, actually there should be a level of support and resistance here, but from a high price here, the market has just dropped, has been dropping, and in dropping, it has been making lower highs and lower lows. Now, this level that we drew, you can see how this level has been keeping price down, or how price has been reacting to this level. So whenever price got here, it reacted, it pushed it down. And then again, when it got here, it also pushed it down, the same thing. Now, these levels, if we were looking at this chart, now, if this was me, and let's just assume that everything to my right hand has not occurred. And so I have seen this happen. So I've seen price reject this level. And when it rejected it, pushed it back down. Again, price got up to that same level and it also pushed it down. And again, it got up to this level and it also pushed it down. Now, I draw this level on my chart. What I'll be looking for next is this. I'll be waiting for price to get to this level. Now, also remember too that it's quite similar. Price has also been rejecting this level. When it gets to this level, it pushes it up. It finally eventually broke below. And when it broke below, it struggled to go back above, but eventually it did. Now, after I've seen the market react to those levels, I'll be looking for, I'll be waiting for the price to get to those levels so I can now see whether it's a trade I would want to take. So remember, all of those things in the past has not happened. And then after 1, 2, 3, 4, 5 days, the market started moving. And you see the market move. And then when I see the market make this move, when I see the market come back again and test it here, I hope you can all see what I'm doing. And then I see the market comes back again and test it here after rejecting one, rejecting two, and then rejecting three. And then I see this happen. Remember, all of this has not happened. Now, I'll be waiting to make a trading decision here. If you were here for our previous class, you know that we talked about price action. And then you can now see that at this level, the market now formed a bearish engulfing. It is not a full engulfing, but it's a strong bearish candlestick from that level. Now, this will be my indication to sell this pair or to short the pair. So what I'll do because of this would be to sell the pair. And then the beauty about support and resistance is they give you areas to place your stop loss and your take profit. So I'll sell the currency pair because price again is rejecting this level. So I'll sell and then my stop loss would be above support and resistance. So, but in this case, maybe above this swing high. So the previous swing high, I'll place my stop loss above this swing high. And then my take profit will be the next place where price has been rejecting too. So normally I might want to target this low price here. But the thing is, price has not up until this point, price has not really gotten down here. So maybe I would have taken profit here at this level here because I can see the market reacted here, and also reacted here. So I would have taken the trade, selling with target at this point. And maybe I might use a trailing stop to target further. Now then 1, 2, 3, and you see how it pushes price down. And then you can go to do this. You can see just clearly this level pushed price down. It forced price down. Once buyers try to go up, this level they were not strong enough to break it, and then it forced price down. Now, in the same way, you have this level of support. This level that has been acting as support here, keeping price above, and then eventually the market broke below it. It did not immediately come back to test it. It just rallied down. But if you see here, it came back again and tested that level again here, and you see how this same level forced price down, and this was over 1,000 pips. What am I saying? This is over 3,000 pips. If I'm not mistaken. Okay. Okay, that was over 1,500 pips. Now, this is how support and resistance aids your trading. So, by drawing your support and resistance, now the first once I put up a chart, you give me a chart. The first thing I do is draw my levels of support and resistance. This is because it enables me make trading decisions. Now, because remember, all of the things in the past they've happened. We're just using them to show you what you could have done. You can see the same thing here. You see how this same level, price rejected it here. So when I see price at this same level again with this from this kind of pin bar, I am definitely going to sell this pair, and my target would be this level of support here. You see how it works. Now you will notice that at those levels of support and resistance, the market struggle to break above or to break below, depending on where price is. You can see previous it has been support all along, keeping price down. You move back, this level has been keeping price down, and successfully price broke above. And then when price broke above, it came back, tested it, and kept price up. And then you can see the same thing. When the market got to this level, it struggled. When it successfully broke below, it came back, tested it, and pushed price down. So this is how support and resistance aids you. Now, Once you've drawn your level, let's use the current chart and the trade I'm currently in. Once you've drawn your levels, remember this is a live market. That means what you are seeing here is what is currently occurring. So when you've drawn your levels of support and resistance, all you have to do is wait for the market to get to those levels. And when the market gets to those levels, you want to see what price does. It doesn't mean when the market, if you've drawn your levels of support and resistance, and then you see price at a support level, you just immediately buy. Because remember, a support can either hold or break. The same thing with the resistance. It can either hold or break. That means when price gets to a previous level, it can do one of two things. It can break below it or continue. Like it can reject that level or break below or above it. So if it's in it, if it's support, like in this case, it can break below the support after coming down, or it can reject and bounce back. And what we are seeing here is a bounce. So in this case, you have the market reject this level and drop massively. Now, if you notice from what we learned yesterday, this pin bar, you can see that there's a pin bar here. I would probably want to adjust this. So you can see that the market formed a pin bar here. Let me zoom in so you can see better. Okay, so you can see that the market formed a pin bar, and you notice that this is also a level of support, of sorry, of resistance, previous resistance, and then from that same level, the market formed a pin bar. This is a no-brainer. So remember how you trade your pin bar. You sell, you can either wait for a 50% retracement, which in this case did not occur. So you sell, your stop loss should be above here, and your take profit. In this case, my take profit would have been here because I can see price reacting to this level. And that move would have been what 350, 346 pips, which is around, if you're trading a standard loss, which is what, $3,400. If you're trading a million lots, now like 340 something dollars, and in 1, 2, 3, 4, 5 trading days. Now, this is how support and resistance really is. This is how you treat support and resistance. You don't just buy or sell. So I would never have just when the price gets here, I'll now sell. No, I'll wait for price to see what the market does at that level. When I've verified what the market does, then I can now make a trading decision, or I can stay aside. You don't always have to trade. As a matter of fact, successful traders do not always trade. They actually take less trade. So they wait for the market when they see a favorable trade, and then they take the trades. If you're trading too often, then it means except you are scalping. If you're trading too often and trading everything, then you're probably doing something wrong. So you wait for the market to make a decision, to make its own decision, to make the market to want to move. Then you follow the market. You're not going to second guess the market. You wait for the market to make a decision or to move, and then you follow the market. So now, in this case, you see the market comes back to a previous level, forms a doji. This is a doji. This candlestick is called a doji, and then it's an indecision candlestick. It means buyers and sellers, they're not really sure what to do. And then in turn started formed a bullish candle, which is almost not really an engulfing, but it's a bullish candle. Now that kept price above that level. In this case, you now see how price the wick of the candle came back and touched the trade, the downside of support, and you can see how it's pushing price up. Now, this trade, is it valid to take? Yeah, maybe. But in my own opinion, the trade doesn't have so much room to run. So I'm looking at maximum the trade might get up to this level before we see sellers kicking. So there's no much room to run. So that's about what 150 pips give or take, and you'll be risking because your stop loss should be below here. So that's not a good trade. If you've not taken in this pair already, then you don't want to do this. But I'm already long this pair from this test of support here. Now, this is how support and resistance work. You want to draw your levels, identify key levels where market has made major turnaround, and then You now want to fine tune those levels to adjust it so that you have the most number of touches. So you can see a clean touch here, a clean touch here, market, a clean touch here, market reacting to it. So you want to, the more touches you have on a particular level, by what I mean touches, the more rejection you have on a particular level or bounces, then the stronger that level is. Like this level now, you can see how it has been keeping price. Let's see if we can move back for that. Let's zoom in. So this particular level now, you can see how it has been keeping price under that same level. It has been keeping price under. When it eventually broke above, it kept price above. Price struggled to break, and then it started keeping price under again. So this is a key level. This is a key level. Now, this is how you draw your support and resistance. You don't want to crowd your space and you want to use a higher time frame, most preferably the daily time frame and the weekly time frame. You can use the weekly time frame to see. The reason I like to use the weekly time frame is just to see those obvious areas. So, because the weekly time frame will give you more views, like you see more of the charts because each candle takes about a week to build and you can see clear areas of support and resistance. Like I cannot immediately see one here, so you can see one here. You can see how that level has kept price below and above. So in this case, why price? It forced price down here, here. So if you have your chart set up this way, once you pull up your chart and you just look at where price is, and then you can now, okay, where is price relative to the support and resistance? Okay, it's at support and resistance. Okay, zoom in. What is it doing currently now since it's at support and resistance? What is it currently doing? Okay, is it bouncing up? Is it rejecting it? Is it breaking below? Is it breaking above? Then you can now make your trading decisions. That is how you draw your support and resistance properly. So like I said, when the price gets to support and resistance, it can either break below, break the level or reject the level. So if it's a support, that means prices that it has prices above it. So in this case, this level now is a support because currently price is above it. But if price breaks below it, it becomes a resistance because it's resisting price. A level that like this level now is has been a resistance, resisting price from getting above it. Once price successfully breaks above it, it becomes a support because it will start very likely holding price above. So once you've identified your levels, you want to see where price is relative to your support and resistance. And then you now combine what we learned in the previous lecture on price action. So if you now maybe go down to your 4 hour time frame, you see how we use the time frame. So you go back to your 4 hour time frame or maybe your 1 hour time frame. You want to see how price rejects those levels. So you can now see um, you can now see how that level interacts with price and then decide to make a trading decision. So what you want to see is in this case bullish signals. So you can see a bullish pin bar, a bullish they are mixed signals. Although I would not take this bearish pin bar. I would not take it as important because it is happening at a low price. You'll be looking for bearish signals at a high price, and you'll be looking for bullish signals at a low price. So when you see the markets, like you can see in this case, it formed makes a bullish pin bar in and around our support level, and it pushed price up, and then another bullish pin bar, another bullish pin bar. So you see, this is how you now combine what you learned in price action candlestick with support and resistance and make better trade decisions. If we go back to our Euro USD and see if we can spot what the market is doing currently. So in this case, you would have okay, the market is actually dancing and around support resistance issue. So in this case, you might want this is a classic case of where you want to stay away from the market. You don't always have to trade every pair. There are a lot of pairs to watch. If you look at the currency pair and it is not doing anything that is clean and defined, well defined, you leave it alone and look for another one that makes sense. And so in this case, the market is not really doing anything interesting. So you want to move on to another pair or another currency pair for support and resistance. And you place your levels. So you once you have those levels on your chart, you want to watch those levels to be able to make decisions. Another type of support and resistance that we would not cover in this course is trend lines. So trend lines are horizontal support and resistance. Remember, all of the support and resistance we've been talking about are diagonal support and resistance. So trend lines are diagonal support and resistance. Today, the ones we've been looking at are horizontal, so straight lines, 180 degree straight lines. And then, but that's not, we also have support and resistance that are not straight lines but trend lines. So you can have a level of support like this. Just as you can see how this level price have been bouncing off of this level. When it eventually broke below it, price is now rejecting that level and pushing price down. So that trend line is a master course. If you've gotten a hand on horizontal support and resistance and you've understood the concept, trend line is what will take your trading to the next level. But first, you want to take baby steps. Take it one, eat your frog one at a time. So when you master support and resistance, and then in some subsequent classes, which will very likely be for our funded clients, because our pro courses will be for clients who are probably funded their account and are trading, and then they'll have pro insights, pro market insight, and pro courses. But just trading support and resistance and trading price action itself alone can make you a profitable trader. Now, this is the much I'll take on support and resistance. So you can, and you need to practice this. That's the only way you can get better. You can't just learn it and sit on it. It doesn't do you any good. You want to pull up your chart and practice. Use your demo so you have demo money. Use your demo and take this level. What you want to do is draw your levels, apply what you've learned, see if you're making money, make enough money, see if you can make constant money, and then you want to now have build confidence so you can now trade life. The idea is to try and be consistent. You're not going to win all your trades. You're not going to get all your trades correctly. But the idea is you want to stick to your trading principle. So if you're trading support and resistance and trading it in line with price action, you want to apply that. I wanted to show you an example of a trade that even though it went against you, you it is still valid. It doesn't mean that you did something wrong. It's just you don't win all your trades. No, we don't win all our trades. And the goal is not even actually to win all your trades. The goal is to have more quality wins than losses. Now let's go back to our chart. So let's try and explain what we were saying or what we're talking about. And so we're looking at a price breaking below a level that has been keeping it up. So now you can see that this level here, this one, let me change the color so it is different. Let me make this blue. So you can see that this level has been keeping price up. So price has been struggling to break below it. Even when it managed to break, it always rallies back up. Now, when it successfully breaks below it here, what did it do next? It came back, tested it, and rejected. So previous support now becomes new resistance. Again, the price came back, tested it once, tested it twice, and it all broke down. As if it was not enough, it came back again, tested it once, tested it twice, tested it three times, and then broke down. Now, this, I've seen something I wanted to use for an example. Let me, if I can zoom in. Now, like we said, the more things that confirms, that supports your that backs your trading bias, the better. So if you have a bearish pin bar followed by a bearish engulfing bar, followed by a dark there's also another pattern that is called three crown, called dark night. So you have three bearish candle follow themselves back to back, and then you have all of them lining up, all of them telling you the same thing, that price is very likely to go down. Then you have quite a good trade in your hand. So you have a rejection here, and also another rejection here. So you can now have another opportunity to enter the markets. So, but even if you took this one and the market failed, maybe cut you out for stop for loss, you didn't. It doesn't mean you did wrong. It doesn't mean you should have maybe put your stop loss here. No, you don't want to do that because if you were wrong, if you're still wrong, you'd lose a lot. Stick to your trading plan and focus on the system. It's the system, progressive improvement. That is how you make money in the market.